Crash course on finance, investment and risk management. Explore investment strategies and risk management techniques used in the finance industry. Of course, I'd be happy to give you a crash course on finance, specifically on investment and risk management. Investment strategies. Investment strategies are techniques used by investors to maximize their returns while minimizing risks. Here are some examples of investment strategies. Diversification. Diversification is the practice of spreading your investments across multiple assets, such as stocks, bonds, and commodities, to reduce risk. Buy and hold. Buy and hold strategy is a long-term investment strategy in which investors buy stocks or funds and hold them for an extended period, typically 5 to 10 years. Value investing. Value investing is an investment strategy that seeks out undervalued stocks in the market. Value investors believe that the market occasionally misprices stocks, and they can profit from this by buying stocks that are undervalued. Growth investing. Growth investing is a strategy that focuses on investing in companies with high growth potential, typically in emerging markets or industries. Income investing. Income investing is an investment strategy that focuses on generating a steady stream of income from investments, such as dividend-paying stocks or bonds. Risk management techniques. Risk management techniques are methods used by investors to mitigate risks associated with their investments. Here are some examples of risk management techniques. Stop-loss orders. A stop-loss order is an order placed with a broker to sell a stock when it reaches a specific price. This is a risk management technique used to limit losses in case the stock price drops unexpectedly. Hedging. Hedging is a strategy that involves investing in two assets with opposite price movements. For example, if an investor holds stocks in a company that produces oil, they might hedge their position by investing in oil futures contracts. Asset allocation. Asset allocation is the practice of spreading investments across different asset classes to reduce risk. This is similar to diversification, but asset allocation takes into account an investor's goals, risk tolerance, and time horizon. Derivatives. Derivatives are financial instruments that derive their value from underlying assets. Investors use derivatives, such as options or futures, to hedge against risk or to speculate on market movements. Top 12 popular risks during investment. 1. Market risk. Market risk is the risk of losses in investments due to changes in market conditions, such as changes in interest rates, currency exchange rates, or stock prices. 2. Inflation risk. Inflation risk is the risk of losing purchasing power due to rising prices. 3. Interest rate risk. Interest rate risk is the risk of losses due to changes in interest rates, such as those that affect bond prices. 4. Credit risk. Credit risk is the risk of losses due to default by borrowers or the decline in the creditworthiness of borrowers. 5. Liquidity risk. Liquidity risk is the risk of not being able to sell an investment quickly and at a fair price. 6. Operational risk. Operational risk is the risk of losses due to internal processes, such as errors, fraud, or system failures. 7. Country risk. Country risk is the risk of losses due to political instability, economic uncertainty, or social unrest in a specific country. 8. Currency risk. Currency risk is the risk of losses due to changes in exchange rates between currencies. 9. Reinvestment risk. Reinvestment risk is the risk of not being able to reinvest proceeds from an investment at the same rate of return. 10. Systematic risk. Systematic risk is the risk of losses due to macroeconomic factors that affect the entire market. 11. Unsystematic risk. Unsystematic risk is the risk of losses due to factors that affect individual companies or industries. 12. Event risk. Event risk is the risk of losses due to unexpected events, such as natural disasters, terrorist attacks, or pandemics. Summarization. In summary, investment strategies are techniques used by investors to maximize their returns while minimizing risks. Some examples of investment strategies include diversification, buy and hold, value investing, growth investing, and income investing. Risk management techniques are methods used by investors to mitigate risks associated with their investments. Some examples of risk management techniques include stop-loss orders, hedging, asset allocation, and derivatives. There are several popular risks associated with investments, such as market risk, inflation risk, interest rate risk, credit risk, liquidity risk, operational risk, country risk, currency risk, reinvestment risk, systematic risk, unsystematic risk, and event risk. Understanding these risks is essential for investors to make informed investment decisions and manage their portfolio effectively. Here is poem for you on investment risk. In the world of finance, investment is king. The art of maximizing returns, the ultimate thing. Diversification, buy and hold, value or growth. The strategies are plenty, the path to success we go. But risks abound, lurking in every turn. Market, inflation, credit, or liquidity we learn. Interest rate, currency, and country risk too. Unforeseen events and systemic risks, oh so true. To manage these risks, techniques we apply. Stop loss, hedging, or asset allocation we try. Derivatives for speculation or hedging we use. To mitigate risks and avoid investment blues. Investment and risk management, a delicate dance. Knowledge and discipline, the key to enhance. Informed decisions, a portfolio well managed. The path to financial success, forever esteemed. ***, start planning your next global adventure with ease and convenience with our Booking.com referral link. https://www.booking.com/index.html $8=7989335 as a great choice to plan your next trip. You can find and book flights, hotels, cars, and local attractions all in one place, and their price match guarantee ensures you're getting the best deal. Thank you for kind support our AnHub Metaverse channel, and please watch more interesting videos here.